What exactly, Krishna, is the dilemma that the Fed faces?
So the dilemma here is that the world next year, the economy may look quite different under a Trump presidency versus a Harris presidency. Now, the Fed's existing economic outlook and published rate plans in the SEP really offer a reasonable approximation of what the world might look like under a Harris presidency, particularly if, as many assume, President Harris would be constrained by a Republican Senate, so not able to do big public spending programs. But it probably does not provide a very good proxy for what the world might look like under a second Trump presidency, because President Trump would represent policy discontinuity, big changes from the Biden administration across things like tariffs, immigration policy, fiscal policy, energy, and regulation. So the dilemma for the Fed is you've got two quite different scenarios up ahead next year. How do you factor that into your thinking about policy?
So the policy, these are all hypotheticals. We don't yet know what it's going to look like, but we have to handicap things, and I'm sure your clients are asking the same things. What exactly then does the Fed, in your mind, look like under a second Trump presidency? How would it change hypothetically if that were to come to fruition?
Right. So first up, there's obviously the questions as to how President Trump in a second term would deal with the Fed. Concerns, as you know, in some places about pressure on Fed independence. I'm more focused at this juncture really on understanding the different mix of economic shocks that the Fed would have to deal with under a Trump presidency relative to a Biden presidency. Now, Powell made it very clear yesterday, very sensibly, that the Fed is not going to prejudge all these things right now. We'll wait and see who wins and then what policies are actually implemented. But I think it is likely that if President Trump were elected and implemented the full suite of his policies, these would tend to be reflationary overall, pushing nominal growth and inflation higher. And the result would probably be that the Fed did not cut interest rates as much next year as it would under a more disinflationary policy mix with Harris constrained by a Republican Senate.
Is there any world, Krishna, that you can imagine where we might actually see some kind of a fundamental change from a statutory perspective about what the role of the Fed is in the U.S. banking, financial system, and economy? I mean, that seems like a very nuclear type option.
Yeah, so I think there's been a lot of discussion around these issues. I think on the regulatory side, some of the recent Supreme Court rulings have raised some serious questions as to the extent of Fed authorities and that of other regulators around certain areas of banking regulation. In core monetary policy, obviously, to change the role of the Fed would require a change to the Federal Reserve Act. Now, I would assess that that remains pretty unlikely, even under a scenario in which there is a Republican clean sweep in November, which, of course, is very, very far from guaranteed if we look at the most recent polls. I do think there is still a number of traditional, if you like, country club Republican senators in particular, who really would not want to tamper with Fed independence, understanding that an independent Fed is best able to run monetary policy for the benefit of the economy and therefore also indirectly for the person occupying the White House.